What's going on, everybody? Hope everyone had a great trading day today. Personally, up like 750 today. It's Tuesday, the day before the big FOMC. Microsoft and Google just reported. So, pretty choppy day overall. Not really much action going on, but I do have some education because I like to say strike when the iron's hot. So what that means is when the market is hot, I want to take advantage of it. Maybe I size up, maybe I take some more shots. But on a day like today, when the market's a little choppy, a little slower, premiums jacked up, IV is high on contracts. I like to try to really sharpen my toolbox, focus on education, go back and journal my trades of the past couple of weeks, get some charts done for the future, some fib levels, obviously. All right. So I think this video will help a lot of you this week, maybe sharpen your toolbox for the coming weeks, because after consolidation, after chop, the market has a lot of information to digest this week with the earnings, with the Fed speaking, with GDP, I believe, coming out as well. I'm expecting a really big move, maybe not tomorrow or maybe not Thursday, but in the next 2 weeks. I think, I really want to prep and be ready to go because there's going to be some opportunity. So I have a good one for you today, as promised. I call this Dipka'S Sacred 2. So essentially, if I were to start from scratch, I've talked to myself 3 years ago when I first started trading, what are the first two things that I would have wanted to know as a trader coming into the market? And what are the first two things that I feel have not only propelled my trading career, but what should be used by most traders, or at least considered by most traders? If you don't want to use these tools necessarily, that's fine. But maybe you pick up on one or two things from this quick video. And, sometimes it only takes like a small adjustment to make a big difference in your trading style. So hope you guys enjoy this one. You should be able to see my screen. Looks like you can. And we're going to start off with number one is going to be Dipka'S A+ checklist. I'm going to run through it with you as quickly as possible, as concise and efficiently as possible, so you have all the information needed. I also have a PDF or a journal that you could check out after. You could, I'll attach it to the bottom of this tweet when I tweet out this video, so you have it. But Dipka'S A+ checklist tonight, and we also have trends. Trends are so important, very simple, but so important, because when you fade the trend, you get run over a lot of times. So some simple mistakes I think will be hopefully avoided in the future after watching this video, but we'll just get going. So Dipka'S A+ checklist here. We're going to start off talking about bad setups. I rank these anywhere from F to C, making it a little broad so I can speed it up for you guys. But bad setups we're going to talk about right now. This is honestly relatable for probably some of you, hopefully not too many of you, but I would bet that a lot of you are taking these types of setups. So what is it? Well, it's essentially adding a position solely based on one or two factors. Okay. So some factors, for example, could be VWAP, flow, volume, key level, right? When I say key level, what I mean by that is, hey, SPY's trading at 393.50. I have a key level at 393 and I see it come down to 393 and I take calls. Okay. Yeah. You have a piece of conviction as to why calls will work off of 393, but you only have one piece of conviction. Okay. So when you only have one or two factors as to why a trade should work, I like to call that an F or a C setup. If you have one factor, it's an F, maybe a D, depending on the factor. If you get to two, you probably have closer to a C, but you're still not where I personally like to be when I take trades. So keep that in mind as we go on. Okay. So those are the bad setups. Okay. Moving on. Okay. Actually, I have one more point here. With the bad setups, a lot of times you're also not considering both sides of the trade. So if you're taking a bad setup, first of all, you're adding off of one factor, right? For example, key level, volume, flow, VWAP, as seen above. Let me go on volume. So you see a stock's getting a lot of volume on your pre-market scanner, perhaps, and at the bell, you take calls off that. Well, it could be getting downside volume. It could be getting volume because it has a catalyst. When news is priced in or something, sometimes you see it sell off. So just because something has volume doesn't necessarily mean it's a good setup for a long. Okay. So if you're taking position solely on one factor, you're not putting yourself in the best position to win. And then on the other point I have here is not considering both sides of the trade. What that means is if you're in puts, got to ask yourself, what I always ask myself is, what would someone who's long be looking for at this price point? Okay. Try to look at the chart from two POVs, because when you have a bias, you tend to only see one side of the chart, when you could see a lower high, but you also could have a bullish pennant with a lower high, something like that. I don't know, just as an example. Always try to see the trade from both perspectives to see if you really have the best risk reward. Okay. So those are the bad setups. F to C, it can vary, but generally don't want to be taking those. Working our way to a little bit of a better setup. I call these decent setups, B- to B+ range for most of these, but adding a position based on at least two factors, maybe three. And I'll say if I have three factors to my favor, then I would rank it a B setup. It likely has a negative counter argument. Okay, so for example, you have VWAP, you have VWAP support, right? So you're trading, SPY's trading over 393.30, comes down to 393. You have VWAP at 393. You have a key level at 393 from the daily chart, for example. There's two factors that tell me that we should bounce from that level. And then you have a third, maybe it's an EMA. I don't know. Maybe it's a candlestick, actually. Call it a hammer candle off of 393, key level, and VWAP, right? But on the contrary, maybe you have a head and shoulders pattern on the bigger chart that's telling you that it is bearish. So you want calls for those three reasons, but you also have one other reason sort of against you. So something like that, I would consider a B setup. It's solid, but if you have other things going against it, you have to be aware of those as well, because those could supersede, whatever reasons you have for taking calls could be trumped by that one reason. If it's really a major reason or a nice setup to the downside, you got to be aware of those. Okay. And last but not least, I call this the A+ setup, but anywhere from A- to A++, depending on the scenario, this is the ultimate A+ setup, the ultimate trade I want to be taking. And when you really think about it, it's essentially adding a position based on at least three, preferably four factors. Okay. I will say this. For one, the trade must be with the trend for it to be considered A+. If it's against the trend, then it's going to automatically go down to an A- or maybe even bump down into the B+ range for something I want to size a little bit less on personally. If you get to an A+ or an A++, the trade can have one negative or one counter argument maximum. So I don't want to see a head and shoulders if I'm grabbing calls. I don't want to see, lower lows if I want calls. I'm going to want to see higher low trend in my favor, and then, three, maybe four other factors to get into the trade. Okay. This is just a baseline. Okay. You want to take some notes. Maybe I'll pass out the slides. I don't mind if you want to look at this, but I think you'll have a better time understanding this in 2 slides from now when I run you through the examples as to how this A+ checklist works. But let me give you one more right up here. So I like to call it the high school essay analogy. Okay. Now I'm assuming pretty much everyone here went to high school. The high school essay, if you remember, the standard essay had 5 components, starting with the introduction paragraph, 3 body paragraphs, and the conclusion. In the introduction paragraph, you introduce the topic or the argument, and you make a claim or a stance, which is called a thesis, right? So you make your claim, say, I don't know, a common one back in high school was like, should schools have uniforms, right? And you're going to say either yes or no, and why. You're going to introduce that in the first paragraph. Then you have the 3 body paragraphs. In the body paragraphs, you have 3 supporting points, okay? Each supporting point is a reason as to why your stance on the argument is true. The more supporting points you have, the better your essay is, the better grade you got on the essay. Okay. The point is, with a high school essay analogy, I'm trying to apply that same reasoning or grading system for taking trades, right? So if I make a thesis or a claim that SPY puts is going to work or SPY calls is going to work at 393, I need supporting evidence for that to be true. The more supporting evidence I have, the more likely I am to get a good grade on the paper, the more likely I am for that trade to be successful. I mean, it makes perfect sense, right? So the more supporting points I have for why call should work at 393, the better and the more likely it is that I will be successful on the trade. Okay. So when I'm taking trades, I'm looking to start, to get as close as possible to at least three, preferably, I wouldn't say preferably, but at least three. And, the more the merrier. So 4 or 5 would be great too, but at least 3 points supporting my rationale or reasoning for getting into that trade at that price point, not just getting into the trade, but getting into the trade at that price point. Okay. Because we're trading options. There's theta decay. There's things that we need to consider, and we want to be as accurate as possible. Right. All right. Let's go on to the next slide here. And this is just a image of the 5-paragraph essay outline. Okay. I'm sure you're all familiar. Might be a throwback for some of you, but let's move on to the next slide here. All right. Dipka'S A+ checklist continued. So let me walk you through this one more time before we go into the examples. Step 1, I would like to identify the true trend. So if I have an A+ setup, first thing I always do when looking for stocks, say I'm trading SPY, I identify the trend of SPY, literally go in circle. Okay. First thing I'm looking for is higher lows or lower lows. That is the absolute first thing I look for. I always personally like to trade on the same side of the trend. If I see higher lows, I like calls. If I see lower lows, I like puts. Okay. Trend doesn't always continue, but when you fade the trend, I mean, the odds are against you. And the trend it doesn't work every single time, but it works more than it does not. I would probably say at least 75-25, right? As far as continuation from a trend when it touches like a trend line per se or something. But I like to check at least 2 time frames. So I like the trend on the 5-minute and the trend on, maybe the 20-day or the 10-minute, something like that. I'm a pretty fast trader. So those higher time frames, I wouldn't say necessarily apply to me. If you're a swing trader, this could be very different for you. That's totally fine. Just what I do is the 5-day, 5-minute, and usually the 15-minute chart as well. So those are the 2 time frames I like to look at for the trend. So once I have a trend established, next thing I look for is the 9 and 21 EMA direction. Don't have to do this, but this is what I like to do to give me more conviction in a play. When I am trading on the same side of the EMA crossover, it's usually lined up accordingly with the trend. The trend is higher lows or lower lows, whatever that may be. It's usually lining up with the 9 and the 21. And again, the more I have, the better. So I like to see with pre-market turned on, I want to see the 9 cross over the 21. If it crosses underneath it, then that is a bearish trend. If it crosses above it, that is a bullish trend. Okay. So first step for an A+ setup, I look for higher, say I'm looking at calls. Well, do I have higher lows? Yes. Okay. That checks the box. Do I have a 9 EMA crossed up above the 21 EMA? Boom. Bingo. I have 2. My trend is established. I have a bullish trend. That is where my bias is at based on those 2 things. Okay. So I'm looking for calls. That's step 1. Okay. So I have 2 reasons right there. Step number 2 is, we talked about options and theta decay. I need to be adding as close to a specific support level, or could be resistance if it's, puts, as possible. I never chase candles. I always like to add into the trend, but against the smaller time frame move. So what I mean by that is if we're 11:30 a.m. Eastern time, we're 2 hours into trading today, and I see we have lower lows and lower highs, we have a bearish trend, right? I'll be looking for puts, but I want to buy puts when we get a pullback. So that means I want to buy puts when it comes up to resistance, not when it's already at the lower end of the trend. Okay. Because I think the risk reward from there is the best. If you chase and you're wrong, you will get smoked. And sometimes you'll buy puts on a downtrend day and you could still lose on a when the chart reverses for temporary. It doesn't mean the trend has flipped. It just means you get a little bit of profit taking. You get a retracement back to the fibs, the EMAs. Totally normal to get some pops and some dips, stuff like that. So I like to add its support for step number 2 of the A plus. I like to ask myself, what key levels are going to line up with the trend lines. Okay, so I'll go into the trend lines in a second. Don't worry about that yet. I like to say, where are my fibs? Where are my key levels for this one? Okay. So for an A plus setup, number 1, I have the trend established. I have a bias on the same side of the trend, number 1. Number 2, I have fibs or key levels ready to go where I'm looking to take calls or puts off of to the same side of the trend. Okay. And step number 3, I want to identify at least one additional added piece of conviction. So we talked about VWAP, volume, stuff like that before. Well, I want at least one added piece of conviction at that price level for it to be an A plus. Okay. So for example, it could be a chart pattern. It could be fibs. I could have, a key level from pre-market low, and I could also have a fib. There's 2 things that makes it a better trade already. Okay. So step 1, identify the trend. Say we have higher lows and 921, 9 is crossed above the 21. I have a call bias, bullish bias. Okay. Step 2, I'm looking for a pullback to resistance, to support, right? We're trading higher. I want it to pull back to a support level. I will add at that support. And if I have another piece of conviction with that, say that support is 393 because I have it from pre-market low, then I also have a fib at 393, or I have a fib at 392.90, or I have VWAP at 393. That enhances the probability the trade will work. There's more support there now. Okay, let's go into some examples. So I often talk about this strategy, the golden goose. I'm sure many of you are familiar, but this is a great example of the ultimate A plus setup. Okay, so the golden goose is an A plus setup because I strike all the boxes. I have at least 3 pieces as to why the trade should work from this price level. So here's one. Boom, 9 and 21 EMA crossover. You see that? The 9 is in teal here, and the gray is the 21. Boom. Step 2, I have those. So I have the trend established, right? I have the EMA crossed over on my side. I also have, look, I have a low here. We bounce up. We have lower lows. Lower low right here, bounce up. This high is lower than all these previous highs. We go lower. So the trend at this point in time is lows. Each low is lower than the next. So what that means is when we bounce, the next low goes lower. So that's the trend that's taking place so far this day. So I have a bearish trend of lower lows and lower highs. I have 21 crossed above. So the 9 is crossed below the 21. It's a bearish trend. So that my trend is established. I have a bearish bias for looking for puts. Now, the question is, where is it going to reject now for me to get in? Where is my entry? Okay. Well, for me, it's at those key levels. This is a fib level I had on SPY in this example at 427. Okay. So we got a pullback to that fib level. I don't chase these candles. I wait for it to bounce and I try to take it at resistance. I have a good resistance at 427. Okay. Because I have a fib there, but how can I enhance? Remember, going back to the checklist. Okay, I have my support and I have my trend. That's good, but I want at least one additional piece to give me a better setup. So I have the trend, I have the key level. How can I enhance this? Well, boom, I also have this 21 EMA right here. 21 EMA right there. Converging at essentially the same price level, very close to where that fib is. So I have 2 resistances converging in one price area, and they are resistance and the trend is bearish. So I have 4 reasons as to why we should reject at 427, okay, and continue into the trend. And I want to emphasize that point at 427. I have 4 reasons why I should reject at this specific price level. That makes it an A plus, because on the back end of this as well, if it doesn't work out, 5-minute candle close above 427 and I get out. So simple. 5-minute candle close above 427 and I get out. I'll lose 5% here, 10%. I have 10% downside. This trade ran 100%, right? So I have 10% downside, 100% plus upside. I have unlimited upside and 10% backside, okay? Essentially, this is the benefit of adding at support and resistance, because if you're wrong, you will know very quickly and you can cut the trade. Risk reward is also very important with these A plus setups. So make sure you're defining your risk reward. I talked to someone the other day who won 2 trades for 100% and 400%. And then they lost 1 trade and they kept averaging down and they let it go, 70%. If you think about it, if you're winning 2 trades and losing 1, you should be green on the day. In fact, with the proper risk reward, you could lose 2 trades and win just 1 and still be green on the day. Okay. So with these A plus setups and adding at support or resistance, I'm really giving myself a clearly defined risk reward. Okay. And say I traded with $1,000 and I don't know, say I lost 2 trades for 10% with this risk management system, this A plus setup system. I lose 2 trades for 10% on $1,000. So that's going to be $100. Say I lost 2. So that's 100 twice is 200. So I'm down 200 on the day, right? Got 2 A plus setups wrong, which if they're really A plus setups, that's probably going to be unlikely, but it can still happen. 10% stop. So I'm down 200 on the day. Then I hit the third one, right? If I have a proper risk reward and I let that run 300 or 30%, I'm up $100 for the day. Let it go 40%, I'm still up 200 for the day. If I let it go 50%, or it goes 50%, I'm up $300 for the day. Okay, so using this A plus system, not only does it ensure that I take the highest quality of setups and ensure myself the best chance to win. Obviously, even with an A plus, you can still get one wrong. I've seen a golden goose go bad once, a clean one once, but it still has happened. I haven't traded it more than like 50 times, but it still has happened. So just be aware of that. Be aware that it can still lose, but on the backside to that, it also gives you a really clearly defined risk management where if you're wrong, you'll know very quickly. Okay. All right, let's move on to example number 2. So here is AMD trade I took recently, like a week or 2 ago. Remember the 5-paragraph essay outline. So I'm going to just show you this off the bell trade on AMD and my logic for getting it into trade. This is an A plus setup because of exactly what you see on the screen here. Reasons supporting taking puts at this $77 fib level. Okay. Well, what are they? Well, number 1 is we have fib level resistance clearly shown here. I have a fib right here. Number 2, I have a tweezer top. Not sure if any of you know what the tweezer top looks like, but this is it. It's a candlestick pattern. You have 2 candles. A tweezer top would be a green candle that basically wicks up, wicks down, and then the second one wicks up, wicks down, and closes red. So the first one's green, the second one is red. And you see right here, it looks like a pair of tweezers, these two, the 2 endpoints right there. Okay, so that's called the tweezer top. Number 3 reason for taking this trade is we have a shooting star candle right here. So we have a shooting star candle on this specific red candle. And number 4, we have a bearish EMA crossover. You see the 9, this teal 9 EMA comes underneath the 21. And we also have obviously this bearish trend forming where you have, look at all these highs. They are lower than the previous. Okay. So I have 5 reasons right there as to why AMD puts will work. And I'm sorry, I have 6. I forgot to mention, I can't believe I forgot this. the 21 EMA right here. So that's a golden goose setup with a tweezer top, a shooting star candle, lower lows trend, bearish crossover trend, fib resistance. I mean, I have 6 reasons to take that trade. You think I'm going to get a good grade on the paper if I have 6 paragraphs supporting why my thesis is true? I mean, you tell me. That's going to be an A+ paper. That's probably going to be an A+ trade. Not always. I mean, not always. Know that trades can still go against you, but I'm enhancing my odds. Okay. So this is all I have for you on the A+ setup. This is the number one thing that I have adjusted in my trading over the last year or two. Not sure if you're familiar, but I took a $22,000 loss about a year, almost 2 years ago at this point. And I'd say a year and a half. Basically kept averaging down, didn't practice proper risk management. And I implemented a system like this as to the types of trades I was going to be taking to essentially make my portfolio what I like to call indestructible or a brick wall. You know, if I follow this system, when I follow it, I really don't see myself getting into too much trouble. It's when I branch away from it is when I find myself in the hole. So it really has had my back and accelerated my trading personally is the A+ setups. You know, not every trade I take is A+, to be completely honest with you. I can't sit there all day, and there's still good risk reward trades I'll take that aren't necessarily following this criteria. But at the very least, I want to start getting away from the C and the F trades, those bad trades, and I want to start gravitating towards this. Maybe I have a B setup sometimes, maybe a B-, but it's when I'm going under a B-, am I really getting myself in trouble on trading days? So just at the very least, I would have this in mind. And again, I'll attach the A+ setup checklist journal for you at the bottom of this tweet. So basically, I have a table key and a table with all the different rankings. You can go in, recap your trades, and rank them based on my criteria and see, you know, maybe why am I losing? Do you fit the criteria? So I think it's a pretty cool sheet to journal your trades and try to get better. Okay, I'll attach that below. All right, now, number 2 thing. So I said Dipka'S Sacred 2. Okay, I gave you number 1. It's those A+ setups. It's not necessarily taking A+ setups all the time, but gravitating towards the A+ and realizing that if you have VWAP support, if you have an EMA tap, one reason alone is never enough for me to take a trade. I need at least start getting in that mindset of having 2, 3, the more the merrier, okay? And then the second thing we're going to talk about today is those trends. So I know I briefly went through them, but I want to go a little more in depth here. So identifying trends, okay? One of the most fixable mistakes that you can likely make in your trading. I mean, sometimes, guys, it's 1 or 2 little tweaks to your game that can completely make the difference, okay? I do not fight the trend when I'm trading, usually. Listen, I have a lot of experience. I've been doing this for a while. If I have double fibs, you might not even know what that is. If I have the double barrel fibs, you know, I will sometimes fade the trend. If I have a really good level, if I have a gap fill, maybe. So there are exceptions, but generally speaking, I do not want to fade the trend, especially with size personally. Okay. Easiest and most effective thing we have to understand as traders is higher lows versus lower lows. Briefly touched on it before, but this is a visual of it. Okay. So, you know, an uptrend is going to look like this. Highs, when you get pullbacks, each pullback is going to be higher than the previous. Okay. So this pullback is higher than this. This one is higher than that. Okay. And the highs are also going higher as well. Okay. It's like stair stepping. What a lot of you guys do is you will buy right here. You'll get this pullback, you'll get stopped out, and then it goes. And then you say to me, Coach, I was right about the play, but I got stopped out. I should have held. And then what ends up happening is you stop practicing proper risk. So the way to fix this is to understand the trend, number 1. Understand the underlying trend that's taking place. And number 2 is getting the best risk reward ads using the trend. Okay. And I talked about that a little bit with the goose, with those support ads, the resistance ads, right? The A+ setups. But you need to understand the trend. Okay. Higher highs is bullish. Higher lows is bullish. That's seen right here. Lower lows and lower highs are bearish right here. Okay. Very basic. So exercise one, and I did this with boot camp, and I can't give you too much at all of the boot camp stuff, obviously, because those guys paid, but I did want to run through this with you because I think this is too important not to share. And it would really it would not be cool not to share. Okay. So I'm going to stop sharing my screen here and I'm going to go into my charting platform. Should be good seeing my screen here, but this is QQQ from today. So it literally gave you a beautiful trend this morning for a trade. I actually tried to take it, but I did not because it was like my TA was off by about 10 cents. So you have a high here. So I encourage you to use the TOS drawing tools, go in and I just grab the circle and I just go in. Okay. You have a low here. Okay. You have a high here. You have a low here, a high here. And now if you don't know what's going on, I'll explain it. But I just showed it to you on the last slide. It's that pattern. Okay, so you have a high here, we sell off, we make a low, it bounces, we sell off, low. Okay, so this low, this low, this low, this low. What's happening, guys? We have lower lows. Okay, so every low is lower than the previous. It's literally like a kindergarten pattern. Each high is lower than the previous, even this one right here. Okay, so you have lower highs, right? This high is lower than this. This high is lower than that, going all the way down, even here. Okay. And, you know, it's a basic pattern. It's a basic trend to the downside. Don't fight the trend. I don't care about what support you have here, 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 and here. You know, what is your trend telling you? Okay. So let me clear this drawing set for a second. You also, so you might be asking, okay, coach, you have the trend there, but where is the best risk reward to play it? So what I like to do, guys, is once we had here to here, I drew a trend line like this. And it actually was like this at first. And this is where I missed it. Okay. But if you look at this candle, it should have went through this candle and this candle. So I did it slightly wrong. So it should have went through this candle as well. And you'll see a beautiful trend line right here. Okay. Throughout the whole day. So once you see those lower highs and lower lows, what I'll do is I'll circle here at open and I see this trend line. I drew it right here. And I'm like, okay, well, where is the best place for me to look to add? Okay. Well, if we have a low here, and we make a low, we bounce to the trend line, we make a low, we're bouncing to the trend line. What if I just add right at the trend line right here into the overall trend? So look, this micro move is bullish, but the broader move is we are in a bearish downtrend. We have lower lows here and lower highs. So I'm looking for another lower high to stall out. Where is it going to stall out? Well, not always, but I'm looking at this trend line as a candidate. And look what happened today. This was the perfect ad spot. I posted the trend line in Discord. All right. So this is not stuff I'm showing you in hindsight. That's easy to see after. I posted this during the trading day before this happened. I posted it when we were trading down here. It's like, I'm looking for a bounce to this trend line. As soon as I saw this right here, after this, I was like, wow, based on pre-market and this, we have lower lows. And look how well that stayed in the channel here. Okay. And it went down, bounced again, went lower. Now, that is how I like to play it. I will say this, I add it right at the trend line and I give it a super tight stop loss. This is the beauty of this type of trading style. I add it here and I give it a 5% stop loss. I'm not even kidding. I literally did a trend line ad today and I actually lost because I didn't wait for confirmation. I lost 2%. Lost 2% on the trade. Upside was unlimited. 2% was my risk. I mean, where else can you do that? There's no reason for me to, in my opinion, for me to let trades go 20, 25%, 40%. Listen, ODT lottos for sure. But Tuesday trades with 4 days to expiry, 3 days, 2 days to expiry. If I'm right, if I'm good, I don't need that much cushion. Okay. I mean, sometimes you have supply and demand. I get that. That's different. It's a different style than me, but this is my style. Okay. So I have literally, I add right here. Sometimes it wicks a little bit above. So I like to give it at least 10% as we get closer to expiry, sometimes 15, but usually like 5 to 10% is all I need. 2% was a little extreme because the play ended up working out and running like 25% this morning, but besides the point. So I'll add right at the trend line, looking for the trend to continue, playing into the trend. So I'm still playing this downtrend. And, you know, if you add puts here, you'll get stopped out here. If I add puts here, you know, that's perfect. That's perfect. And if I'm wrong here, you'll stop out here, but then you would have been right. And then you'll turn around and be like, coach, you know, I was right, but I got stopped out. What am I doing wrong? Well, maybe you're not adding at the right levels. Maybe you're not adding on the trend lines into the trend. Maybe you're not adding at A+ key levels or A+ areas. Okay. So those are some fixes I think that a lot of you probably could easily make, but go through and, you know, just look at the trend. Watch this. Actually, let me not clear the whole drawing set. So I have all these lower lows and lower highs, right? Guys, when do we get a little short-term reversal? Look what happened here. We failed right here to make a lower low. And when we failed to make a lower low, we reversed a little bit. It was temporary. When did we stall out? It's when we got a triple top right here. Okay, so we didn't make, okay, so watch this. So we had lower lows, and you had lower highs. That's bearish. Well, that no longer is bearish when we pull back here and we bounced. Then we got another higher low here, but we failed to make a new high. So that signaled that maybe the trend would stall out and flip back to bearish. And we did. Okay. Look at this after hours action. We made a low here, higher low. Okay. And we continued to go upwards. Let's see about yesterday. I think SPY had a good example. Look at this. I see it on QQQ right away. Low here. Each low is higher, right? And a lot of you will say, coach, it's so choppy. It's so choppy. I can't trade it. It's going up. It's going down. There's no follow through, right? Well, I'll say to you guys, we have higher lows and higher highs. What are you talking about? This is a beautiful trend line. I see this, guys. I salivate. Not to be like weird or anything. I'm obviously exaggerating, but like I get excited. I get fired up for this shit. I mean, higher lows right here. I see this. I'm like, oh, if they give me another trend line tab, I'm taking it to get new highs, right? Highs are all higher. Okay. And, you know, as soon as this trend line broke right here, I would have stopped out if I grabbed it for a fourth time, right? So it doesn't always work out as you see here, but it worked out here, right? It worked out here. Okay. Puts would have worked off this top trend line. Okay. You could do it like that. It's a channel. All right. Beautiful stuff right here. And also there was a big squeeze into close. Let's see. Did we flip trends into close yesterday? Big squeeze, big squeeze. Okay. So we had a low right here. We went up. Here's your high. We pulled back and we pulled back. This wick didn't go down to make a new low or even a double bottom. It made a higher low. That's bullish. Boom. And then we exploded. Okay. Look at yesterday. SPY. Same thing as Qs. Here's your higher lows, higher highs. Okay. So need to understand the trend. It will make life and trading easier. Look at this, by the way. When did we stall out up here? We have a high. We have a low. We have a lower high. So we see this right here? We make a high, we make a higher high, we make a higher high. We fail to make a higher high here. That was your signal. Oh, the trend is flipping. We are not making higher highs here. Then we reversed, right? We reversed until what? Okay. Till we got a higher low right here. That was the first one right here. You don't have one here. Look, we have a lower low. Okay. So bearish. We have a low here. This one is lower than this. This one is lower than this, right? This one is lower than that. Is it going to continue? Well, I'm waiting. I see the higher low and we flip. Okay. Let's see right here. High. There's your low. Lower high right here. That's a lower high, which is bearish. We go down. All these are lower. The highs are getting lower. I mean, understand the trend there, guys. Okay. So, all right. So here's an example from last week on Spire 2 weeks ago. You have higher lows here. Okay. It's literally like a pattern, guys. Here's your recent high. Here's your higher low, higher high, higher low, higher high. Okay. It is robotic. Remember, guys, there's a lot of algos and computers, big part of the market nowadays. You got to understand that a lot of it is like literally, I call it kindergarten, like patterns from kindergarten. It's so robotic sometimes. So just try to pick up on it. Here's another one. Here's your high. There's your lower low. So what's going to happen? You get a lower high, get a lower low. I look to add right here for the next potential one, for example. Okay. And then I'm looking for a bounce off this trend line up to here, maybe for it to go back down here. Okay. I draw trend lines and take puts off the top or calls off the bottom with a 10% stop loss, as I mentioned before. So right here, for example, I would probably look for a put entry with a 10% stop loss, unlimited downside, or unlimited upside if it goes down. And if it goes against me, I'll have a 10% risk. Okay. Really good risk reward. I mean, those are the trades I want to be taking. I'm not saying that you have to trade like this, but just consider these things. You know, when you see higher lows, do I want to be in puts when I see higher lows? Maybe not. All right. I hope you guys enjoyed this video. If you do want more, I can't give you obviously most of my stuff because it's just unfair to boot camp. You know, I worked a lot with hundreds of people. We got really good feedback from this most recent course. 97.1% were satisfied with the course and everything. They loved it. So if you're interested, just DM me and I can get you those recordings. So yeah, that's all I got for you today. Hope you enjoyed this. And, you know, if I could leave you with two things, I guess three things. It's not necessarily that you have to play the trend lines with the 10% stops like myself, but more so try to look and identify the trend on 2 time frames. I mean, it'll really help your trading. At the very least, go back and journal your trades, circle your losers. Did you fight the trend? Right? That's the number one thing. Did you fight the trend? Did you chase a candle? Those are 2 fixable mistakes. And then I would also say, you know, risk management, important takeaway from this video. You don't want to be someone that has a negative risk management, risk to reward ratio. You want to have a positive risk to reward ratio. So what that means is if I take a trade for a 10% gain, that's fine if I'm a scalper, but I can't then be giving it 15% backside. So I can't have a 15% stop loss if I'm taking profits at 10%. It doesn't make sense. Okay. If I'm taking a trade and I have a 10% stop loss, then I want to take profits maybe at 15, 20, 25, 30. Okay. It has to make sense. You can't have a 20% stop loss and take profits at 10% because then, you know, it takes one bad trade to wipe out 2 good trades. If you think about it like that. Okay. So if I could leave you with the trend, if I could leave you with the risk management, you know, risk to reward ratio thing, and if I could leave you with considering A+ setups, I want to be thinking of reasons, more than one, as to why I'm getting into a trade. That would make me very happy. Now, please reach out. Let me know what you think about this video. I'm excited to make some more. I have great content. I have a lot of stuff. So, we have the bootcamp recordings. I think it's pretty cheap for the content and the delivery that we've done, especially my courses. If not interested, still reach out. Give me some feedback. I'll definitely do some more free ones as well. But I appreciate you guys, appreciate the support, and I hope you guys have a great rest of the week. Big day tomorrow with Fed, so be ready.